Thanks so much for tuning into the Trade Setup with me, Neeraj Shah. And yesterday's fall would have shaken the strongest of bulls, and with reason. The question only is, can the globe come to the rescue? Can other factors come to the rescue? Or is this become a sell on rise template for now? Well, let's take stock of that. First, let's look at the global news flow. Asian stocks have largely gained as the Fed rate cuts hopes have built up. This is a big trigger for emerging markets at large, including India, and therefore that's to be kept in mind. Oil has fallen after OPEC Plus signals a plan to return barrels to market. Remember, Brent and NYMEX continue to trade sub 80 in a meaningful way, and that is actually a big positive for all markets which are oil importing, India in particular. What else? Australia orders China-linked investor to sell rare earth stake. That issue between Chinese stake in some key areas for multiple countries continues to linger. Paul Krugman says China's economic model is not sustainable. When he says well, in a lot of cases you should listen, and let's wait and watch if this, if not this statement, but what's happened with regards to policy measures that they've taken with real estate, etc., really transpires further, because metal investors or investors in metal stocks have a lot of, their investments have a lot of implications of what happens to China model and the resultant impact thereof. So that's to be kept in mind. Having said that, Boeing resumed China deliveries. Chinese state media reports suggest this. Well, maybe for Boeing, it's a big thing as well. Okay, bring up what the US markets did, what Asia is doing, what the implied open is suggesting. So a bit of a green on the screen for the US markets, and Asia too has built on from there. Nikkei is down, Kospi is up, Hang Seng is up about 1%. So it's a mixed bag, if you will, not exactly up, but largely we've had a positive move. And the implied open has strengthened as the morning has gone by, from 90 odd points to 135 odd points. So a very large percentage gain relative to what we lost yesterday, but it's a green nevertheless. Now, what's the trade setup for the day? I think the question marks on policy style could linger until proven otherwise. Now, I'm talking about the very short term, until either the budget is out and we know what's happening, or some indication about what the policy is going to be. Because the policy previously was strengthen PSUs, give Atmanirbhar Bharat, defense, focus on capex. Now, I think there'll be question marks on that. We already see brokerage notes speak about that. There is a tilt coming back to defensives and good value stocks versus those expensive capex defense stocks. And I think the question marks on that policy style would linger unless the budget or further policies or order flows lay that out. So I think that the premium that some of those stocks enjoyed could really come off, if not vanish altogether. That's to be kept in mind. They don't get very expensive multiples, they get normalized multiples based on their earnings. Also, it's very difficult to call how FI and DI flows would stay in the interim period. We've been used to very strong domestic flows into equity markets, believing that all is kosher, everything will go as per plan. This is the first real jolt, yesterday's jolt, that the domestic investors have had. Will they stay the course? Don't quite know. Will FIs, who sold 12,000 crores in yesterday's session, continue to sell? Very difficult to say. I think it's just a near impossible call to make. We'll try and get global strategists to try and understand how will FIs think in light of this. The fact that the NDA government is coming back to power, remember that, as per PM Modi's message yesterday, it's not that there's a change in government. So therefore, maybe there is an alteration of policies, but the complete overhaul of policies is not foreseen as of now. So bear that in mind. But difficult to call how the FI flows behave. Yesterday was a big outflow. In some sense, some of that is out of the way as well. And expensive CAFEX defense-related stocks will continue to see sell-at rises. So HAL has already come off 17%. Can it do further selling today? My bet is that some of these stocks might continue to see some selling, but even if they don't, and if these stocks reverse, they used to be buy at every dip. I believe that for now, looking at the valuations, they remain a sell on rise until policy clarity emerges. I know I'm sounding like a broken record, but I want to drive home this point. Like I said, FI selling was fairly large yesterday, so 12,000 crores for FIs. DI sold about 3,319 crores as well, so that number is not looking too positive. And in terms of stocks to watch, Let me first start with some of the strategy notes that brokerages have come out with. So, the CLSA India strategy, they say that the verdict raises doubts over policy making styles. So that's part one. So this note is very negative, the others are not, by the way. CLSA says that doubts openly question the notable premium of India equities versus historical premiums, and also doubts over the SMID premium and the recent re-rating of the Modi stocks. So could some of these come off? Maybe they could. Like I said, it doesn't do too much to the earnings trajectory of these businesses maybe in the near term, but the valuation premium might just become a bit faded. So that's to be kept in mind. CLSA replaces L&T with HCL Tech in the model portfolio, and of course they have tilted heavily towards private banks, IT, insurance and commodities, which are the preferred sectors. Note that in case of private banks and insurance, they don't depend on policy, IT, global, commodities, global. So they've done away with all the policy-linked stocks for the time being. Maybe not a bad call, but CLSA sounded a lot more skeptical than what some of them have. Like Bernstein, for example, is not so skeptical. Bernstein says that there are no contentious topics between NDA and the allies, as NDA had, well, the BJP and its allies, as NDA had consensus on policies, and therefore their call is that if opposition wrests away key allies, the investment approach to India would change, but they assign a very low probability to this, and therefore they are not baking that in there. Morgan Stanley too has had a fairly constructive note. They say they are positive medium to the long term. Short term is a very difficult thing to digest or guess any which ways. Some stocks to watch today, not too many, but I think Hindalco under a bit of a cloud today, maybe because Novelis has announced postponement of the US IPO due to market conditions. By the way, this is global market conditions and not local, so bear that in mind. They say the Novelis will continue to evaluate the timing of the offering in the future. So that premium that was attached to Hindalco because of the Novelis IPO at the upper end of the price band, that premium comes off as well. Remember, Novelis still stays within the books of Hindalco. I don't think this is a very deep gash making thing, but today Hindalco could react for sure. So bear that in mind. What else? There is HDFC Bank. The ADR plunged quite seriously post the stock fall yesterday. The stock was down 5.5%. ADR was down about 8-9% if I'm not wrong. And that may impact the stock slightly today. But keep in mind with the implied open the way it is, I really doubt that if banks and IT don't perform, how will we get that green on the screen? So very likely that we will not have a sharp gash, but never know. I mean, it's a difficult one to predict. Just be mindful that for the very immediate term, maybe large market participants would not come out and buy every fall. They might be very choosy, and there might be a lot of rotation. So if your portfolio has PSUs, defense, etc., in the near term, that portfolio could see some selling even if the market is stable. So please keep that at the back of the mind. Lest I be sounding too negative, I'm not, because from a policy continuity perspective, it does seem after PM Modi's speech yesterday that policy continuity could prevail. So that is one thing from a market's perspective, I'm saying. So policies don't change too much, just that there will be rotation within sectors. And if you read all the brokerage notes, most of them kind of lay that out. So that's to be borne in mind, that individual portfolios could differ materially independent of what the Nifty does in the session today. Thanks so much for tuning into the Trade Setup. Have a great day ahead.